Hi, my name is Sunil Fernandez and I'm the managing editor of goodreturns.in. We are a leading personal finance and business news portal in the country. I'm here to do a quick business roundup of the day's developments, especially what was in the news today in the world of business and finance. Let's begin with the stock markets today. The stock markets were buoyant, or let me put it relatively buoyant, if not very buoyant. The Nifty ended the day at higher by 76 points, and the Sensex, of course, crossed the 41,000 points mark today and gained about 237 points. Leading the set of gainers today was GAIL, or Gas Authority of India. The stock jumped almost 6-7% in trade. There was tremendous buying in the stock. We saw a good amount of buying even in metal stocks. Now, when the global markets are up, the metal stocks tend to perform very well, and we saw a stock like JSW Steel among the top gainers from the Nifty space. Now, what declined today from the Nifty stocks was Yes Bank. There were reports that suggested there are many depositors of Yes Bank withdrawing their money from the deposits of Yes Bank because they're not sure about the stability of the bank. And there are many readers who are asking us, what do we do with the Yes Bank stock that we have? The one thing that we should remember is Yes Bank has got a very, very strong brand equity, and it's capable of raising resources. And you've not seen in the past that a major, big, large private sector bank really collapsing. So to that extent, the worries are limited. We've seen a history of the smaller private sector banks being taken over by the larger banks. We remember Global Trust Bank was taken over by Oriental Bank of Commerce when things were not too good at the Global Trust Bank. We have seen Times Bank being taken over by HDFC Bank, and then you had the case of Centurion Bank. So we've had instances where the bigger banks tend to take over the smaller banks. But here the case is Yes Bank is not a small bank. It's a really large bank. It's the fourth largest private sector bank. So we feel that the bank won't be allowed to go bust, and the government cannot afford to, because it's a really large size bank. It will lead to chaos. So we think that some of the larger bank would take over Yes Bank in case there are problems. In any case, the stock fell today by 1 to 2% and ended the day lower and was among the top losers in trade. One of the other stocks that really fell badly, about 7 to 8% today, was Bajaj Consumer Care. Now, this company makes the famous Bajaj almond hair oil, and we saw the stock drop largely because the quarterly numbers were not too good of the bank, so of the FMCG major. Now, the smaller companies into the FMCG business, like Bajaj Consumer, as we said, have seen, or Jyoti Labs, we are seeing the stocks of these FMCG companies fall as compared to the really big FMCG companies like a Hindustan Unilever or a ITC. So there is some impact on the smaller FMCG players. We clearly seen it in the case of Bajaj Consumer. We have seen it in the case of Jyoti Labs, where the profitability has fallen. So which means we are seeing a hit in consumer sentiment impacting the bottom line of these smaller FMCG players, not the really big ones like a Britannia or a ITC or a Hindustan Unilever or a Nestle for that matter. The smaller FMCG companies are really being impacted and taking a hit on their profitability. The other stock that was really volatile during the course of the day was Zee Entertainment. Though it did not end in the negative, it ended marginally in the positive. We should remember that it came on the back of a 6 to 7% fall on Monday. Today it ended the day almost flat. The stock has dipped to now 230 to 231 levels from levels of 300 that we've seen in the month of Jan. And it's got largely to do with an investigation that is happening by the Ministry of Corporate Affairs into the books of Zee. So the assumption is that there are some things that have bothered the Ministry of Corporate Affairs as far as the books of accounts of Zee are concerned. So there's an investigation going on into the books of accounts, and we need to wait for the investigation to be completed and see what transpires there. Now, readers are also asking us about the Z Entertainment stock. Should we buy into the Z Entertainment stock? When you buy a stock, the assumption is that it represents, the financials are fair and represents the true finances of the company, the financial worth of the company. Now, if that itself is suspect, then investors are very worried. They tend to dump the stock because this is a governance issue, and so people tend to dump the stock, which is what has happened with Z Entertainment. We don't want to say anything. We don't know whether the books represent a fair picture or not. It might even represent a very fair picture. We'll wait for the investigation to complete, but at the moment, it's better to stay away from the Z stock. Remember, Z Entertainment and Yes Bank are stocks that have a tremendous brand equity. So to that extent, we should remember that the brands are very well recognized, both in the case of Z and Yes Bank. So investors who feel, there are a lot of retail investors who are already stuck in Yes Bank, so they might just not be able to buy more of the stock. Coming to a roundup of the global markets, we saw the US Dow Jones Industrial Average and the S&P 500 hit record last night, and we understand that the Dow futures are again pointing to a higher opening, which means we could see another record opening for the S&P 500 and the Dow Jones Industrial Average. Now, the irony is that on one hand we have the coronavirus that people are talking about its impact on trade and business and finance, and on the other hand we have stock markets that are hitting record highs despite worries of the coronavirus impacting trade. Now, there's a simple reason for that. Why, despite the coronavirus, the stock markets across the globe are very buoyant and almost at record highs? It's because of the liquidity situation in the global markets. Global markets are flush with funds, and every opportunity, whether it's a coronavirus or any other virus, the markets just brush them aside and they keep buying into stocks, and you have the markets like the US markets keep hitting successive highs each day. Today they might open again higher. So coronavirus has not really had an impact. It might have an impact on trade and commerce, but it has no impact on the stock markets, though logically if trade is impacted, stock markets should be impacted. But the stock markets are so buoyant these days, they tend to discount every other thing, every piece of negative news. So at the moment, as far as the markets are concerned, we have the German DAX, the French CAC and the UK's FTSE all trading higher. Asian markets also closed on a higher note thanks to record closings on the US markets. The markets would continue to trend higher. This is what we believe. Now, Indian markets closed higher also because crude prices have been declining. We understand that petrol and diesel prices in the country have fallen significantly. In fact, petrol prices have fallen for the 6th straight day. That's very encouraging. In fact, in the last 6 days itself, we have seen a drop of 1 rupee in petrol prices in Delhi. This is good news also from not only from a consumer point of view, but also from an economic point of view. Remember, India imports crude, and therefore it's a drain, and it impacts the current account deficit as well. So falling crude is very beneficial for India and the Indian economy. It not only reduces petrol and diesel prices at the retailers, but it reduces dollar outflow from the country. It impacts the currency as well. So that's really good news for India. And as fuel and prices like petrol, diesel keep falling, we'll see inflation falling. And when inflation falls, there are bright hopes that the Reserve Bank of India could reduce the interest rates or cut the repo rates. So crude is good things are happening as far as crude is concerned for individuals and as well as the economy. Coming to what's the outlook looking like for the stock markets, we have most of the corporate results out and a few numbers that came in. As we said, Bajaj Consumer was looking, the numbers were not too good. Oil India reported numbers last evening and the net profits of the company declined. But investors are recommending to buy into some of the oil and exploration companies because the government-owned oil exploration companies are giving you a very good dividend yield. For example, Oil India has declared a dividend of 9 rupees per share. Based on the dividend that the company has declared, your dividend yields is going up to almost 7.5%, which is exceedingly good. So we are recommending investors to look at the oil and exploration company stocks for their dividend yield. The currency has been stable today. We've not seen too much of an impact on the currency. In fact, it's been stable through the entire last week. There has been less volatility. Probably the RBI is also intervening in the forex markets, and for a long time we'll see this 70, 71, 72 range on the rupee against the dollar. All in all, it's been the week has begun on a good note. Markets are doing well. We expect the markets to continue to consolidate at these levels. That's it from us for now, and we'll do another business roundup. We're going to do a business roundup each day, so keep watching us. And in the meantime, if you want, you can log on to the website of www.goodreturns.in to read more on personal finance and business news. That's it from us for now.